not a very long question, pretty straightforward. And really, the main crux here is that US dollar back test as king in quad four. So it is king. We are in quad four. So my question to you is, what's wrong with simply holding cash, right? Or why does it need to go toward a quote unquote ticker? I understand if you're an advisor or you manage a family office or a professional investor, I understand you may have compliance or investment policies to navigate. I get that, right? So there's definitely ways around that, and I'll certainly get into that. But I think, as well, I'd encourage you. This is not old wall, right? We don't have sort of buckets of that from a model standpoint that you need to put XYZ percentage in cash, or you can't hold more than 10%, right? I think that's kind of nonsense, right? And so just want to get you outside of that mentality. In quad four, Jen, on that next slide, if you don't mind, just want to show you kind of how that quad four back test, right? So quad four is absolutely, US dollar is king in it. That's kind of why I mentioned it. And it's a big time out performance, the quad where the US dollar really shines. And we've back tested that. And that's again, this is, for every time, again, the 79%. So that means, 21% of the time, it is not king, but, you've got a pretty great, historical reference there of being long the dollar. So if your cash is actually in US dollars, then that's a good place to be. If you're international and you need to understand kind of, then you might not want to hold cash in say the pound or the euro or the Aussie dollar, or the Canadian dollar for all my Canadian friends up there. But so in that case, you got to figure out, okay, how do I kind of deploy that my home currency into an asset that's going to perhaps appreciate in value during a quad four environment. Just to kind of keep it a little bit kind of back on the US side of things. If you don't want to hold a large cash position, or you need to do so from a compliance and regulatory standpoint, there are certainly money market funds that hold short dated, treasuries. There's a couple that, that I kind of Googled and some wonderful kind of members of Hedgeye Nation provided. So there's an FDR XX, which is, the Fidelity Government Cash Reserves. There's a JP Morgan liquid assets one. It's called CJLXX, which, two different folks have kind of, I won't say recommended, but certainly, I posed this question to Twitter last night. Schwab has a government money fund. SNVXX was one that I found. Again, you can just like Google it, Google your broker, Google high yield, money market, and then dive into what's inside the holdings or portfolio, and you're going to get a good glimpse as to what that means, right? So a lot of these are kind of yielding 3.7 to 4-ish%, four and a bit percent. Some have minimum investment requirements, some don't. So again, just take a look at those. The flip side of that, and we've talked about this ad nauseum really on the weekly notebook review, and it hasn't really been discussed much lately because I think everybody got the gist. But you can also just invest directly in 3, 6, or 12-month treasuries, and you can roll those, right? So the beauty of a 3-month treasury is if our view is that the Fed's going to continue to raise rates. So next quarter or in 3 months, you can roll that 3-month treasury or T-bill into a higher yielding or potentially higher yielding treasury or note, right? So again, you got lots of different ways of kind of leveraging your cash position if you wish, or if you just don't want to hold it on hand. I know CDs have been a conversation as well, but I'd really probably lean you or encourage you to kind of take a look into how to directly invest in those shorter term treasury positions. And again, like the beauty with even like a 12-month is, we see a quad one environment coming in the back half of this year, but the data is going to roll in, and that's going to impact our nowcast model, and who knows what that might look like in kind of Q3 or Q4. So even in 12 months, if you've got 2, 3, 4% of the portfolio, I'm just using those numbers kind of randomly, but if you got that in a 12-month treasury yielding XYZ%, then that's going to kind of roll off almost kind of at the right time to pick up on that the trough, right, and kind of confirmation of a potential move into a quad one environment.